Lots of questions, mixed signals. Is the market undersupplied, oversupplied, or is there a lack of clarity?
I mean, as we stand now, as of today, I think markets is well supplied. There is a significant amount of oil to meet the demand. But now it is for today. What will happen tomorrow and the day after tomorrow is very important, because there are at least three important factors. Number one, the oil demand growth is still significant. We see some signs of weakness in oil demand growth, but still, compared to historical averages, still very strong. Number two, you mentioned Iran. Exports are falling down rapidly, and perhaps more and more in the next weeks to come. Plus, as important as that, Venezuelan oil production is a free fall, going down very strongly. Number three, in addition to these two factors, strong demand growth, plus the Venezuela-Iran, there are some soft spots in the oil-producing countries, such as Libya, Nigeria, Angola is declining. Putting all of these things together, I believe even though we saw some relaxation in the markets in the last few days, we are not out of the woods yet in terms of the oil markets and the tightness. So important to keep the eye on the ball, which is the next quarters to come.
Keeping the eye on the ball, keeping the eye on November 4th. When those sanctions come into effect, how much supply will be removed?
So it is not clear to, I guess, anybody yet. There is a
hazard a guess for us.
I cannot make any guess here. First of all, I don't know. But even if I knew, I wouldn't make it. It's another issue. But what I know is that there is ongoing discussions between the governments involved. But I know one thing: it will be lower than today. Definitely, the Iranian exports, plus the Venezuelan effect, plus the strong oil demand growth. I would urge the key producers to bring more barrels to the market, so that we don't go to unwanted, undesired territories in the last months of this year.
How optimistic are you about waivers?
I know that there is a discussion between the U.S. government and the governments involved on the importer side. We don't know how it goes, but I hope that the results will be good for the oil markets and for the oil prices.
Dr. Birol, earlier on my colleague was talking about the weakening yuan. The weakening yuan has impacts on the other emerging market currencies, and that deters, or rather, puts a lid on the demand of oil that they can make. I mean, how do you see that playing out, given that the yuan is expected to continue to weaken with a strong dollar?
I think we see this curious problem, not only with yuan, but many other emerging markets currencies. Rupee is the same. Many emerging markets in this very region, the ASEAN region, we see it, and it has major implications for the consumers and also for governments. For example, 1 week ago, or 10 days ago, the oil prices were about $85. Now, with the $85 measured in rupees terms, a consumer in India was paying for the gasoline or diesel the same price as they were paying when the oil prices were $147 a couple of years ago, because the rupee lost value vis-a-vis US dollar. So from that point of view, I think it is very important to see for all of us, producers and consumers, that the higher prices would be detrimental for the global economic growth, as we know that the bulk of the economic growth comes from the emerging countries now, and if their economies, if their fiscal positions are negatively affected with the higher prices, this is not a good news for, of course, those countries, but also for the exporters, because their clients, their consumers will be in a better position.
OPEC expected to stand pat at the next meeting, but is it expected to cut production given expectations of the slowdown in the global growth and also what's happening in emerging markets?
Of course, it's up to the OPEC countries to decide what they are going to do, but I would say, given the demand growth, still momentum is there. It is perhaps slowing down as a result of the economic growth is a bit slowing down as well. Trade conflicts, we mentioned the currency crisis, but still, compared to historical averages, oil demand is still strong. Plus, we are going to lose a lot of oil from Venezuela, from Angola, from Iran. So cutting the production, in my view, may not be the step in the right direction. It's up to them, but I would think twice.